This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week that began on January the 30th and ended on Friday, February the 3rd. It was a very busy week. We knew it was going to be a very busy week. A lot of big news that was pending as the week began. We're going to have the next FOMC meeting, all of the PMIs for the manufacturing and the service sector. And we knew we were going to end the week with the most manipulated data of all, the BLS-BS, the latest U.S. jobs report. As the week began, we knew it would be a lot about the dollar. Dollar index has been declining since November in a pretty steady channel. As such, because the computers run almost everything, gold and silver have been moving up since November in a pretty steady channel. So we watched the dollar index pretty closely at TF Metals Report, and that was one of the charts we discussed back on Monday, January the 30th. I thought I would draw this dollar chart a little bit different today. Rather than a channel with parallel lines, I usually draw it parallel off that red upper boundary because that's the dominant line. Today I drew it more as a wedge, though if you're going to draw it this way, yeah, it's a narrowing wedge, falling wedge, which usually precedes a kind of a breakout to the upside. Just like a rising wedge usually precedes a drop to the downside. But this isn't narrowing very fast, okay? So there's still a ways to go. Either way, whether as you draw it in a wedge or in this or in a channel with parallel lines, it's still a ways to go. It looks, at least, before breaking out one way or the other. Tuesday brought the last day of the trading month for January, and it brought some pretty volatile action in the precious metals, particularly in silver, with another drop down to its 50-day moving average, but then a bounce from the areas that had been support for about the last 6 weeks. Now, of course, we know now, as we get toward the end of the week, that support levels were going to be broken. But back on Tuesday, things look somewhat positive, and that's all part of what we discussed on Tuesday. Silver on the daily chart. Look at that little dip. Just like, what day was that last week? Last Monday, where price dipped below the 50-day moving average and into our little target square there of where the support should be. It ran right back higher. And by a couple days later, with all the shenanigans around option expiration, was damn near to 24.50. Well, what did we get to today? 23.05. Below the 50-day again, but then immediately reversing. Look at that beautiful little hammer thingy. So far, so good. I mean, just consolidation, clear resistance at 24.50, but hell of a lot of support between 23 and 23.50. Wednesday brought the conclusion of this month's FOMC meeting. We got the Fed lines, and we got Powell's press conference. During the Fed lines, not much happened. Gold and silver went up and then down. It was when Powell began speaking at his press conference that the dollar index began to tank and the precious metals soared, finishing Wednesday at about 1965 in COMEX gold and ready to trade even higher into early Thursday. And then we know what happened after that. As of Wednesday afternoon, though, things still looked pretty good, and there was reason for optimism, and that's part of what we discussed Wednesday, February 1st. Here's COMEX Gold, April 23 COMEX Gold. Again, we'll start from November the 4th. We connect that to 1, 2, 3, 4, 5, 6 points on the line in late December and early January. So we got ourselves a hell of a trend line. We know we're starting in the right spot. Finding support there yesterday, and you could call it again today. And now, again, highest close since probably about the same day, April 21st or so. I'd have to go back and look. Well above 1960. 1960 being the next rung on the ladder. Add $40 from here, you know it becomes the next target if we can remain above 1960. This week's Thursday conversation featured a new guest to TFMR, Jim Iorio, who is a veteran trader, futures and options, all sorts of experience and wisdom that he shared with all of us at TFMR. As always, it's a free public podcast. All you got to go just to tfmetalsreport.com. Scroll down the page until you see the link, click on it, and give it a listen. You are certain to learn something. Here's just a very small snippet of what Jim shared with us on Thursday.
Okay, so the biggest fave that I have is copper still. even
Okay.
though I think if gold and silver take it on the chin, technically, as part of positioning over the next couple of weeks, I'm fine with that. If copper trades back above 435 and settles up there, I will be adding to already decent long position copper. The thesis behind it is that we had a year of the Fed tightening and the dollar screaming higher. I believe that's over. I believe China's reopening with fits and starts is going to happen and be smooth at some point in time. For God's sake, I hope so. And I don't know if you noticed that both China and Japan injected liquidity into the system over the last week or so.
Yep.
So if they still keep throwing money into the system, I think that could affect certain things more than others. And I think copper's number one on that list.
And on Friday, February the 3rd, we are graced with another what we call BLS BS. The Bureau of Labor Statistics puts out the jobs report every month, and it's always full of BS. So it's the BLS BS. None more so than this month. Boy, I've been watching these reports now for a dozen years. This one particularly egregious. You're told it was 517,000 new jobs, 3 million new jobs from a simple, what they call seasonal adjustment. But even disregarding that, 624,000 jobs added that were part-time. Take those part-time jobs out, and you're left with nothing. Again, the BLS looks at someone who loses their salary job and replaces it with 3 part-time jobs as a net gain of 2 jobs. So whatever, they can play all the games they want. Doesn't change the picture long term, and as we've been telling you all year, the long-term picture very bullish this year. You just got to wait for it all to play out, and it's going to be a few more months before the metals really begin to turn higher, just like they did in 2010 and 2019. On the weekly chart, you can see a big engulfing red candle. If you look across this chart, you'll see all other instances of this, and it usually leads to several weeks of downturn once you get a candle like this. So we're probably in for a tough month, and maybe 4 or 6 weeks. Maybe gold will fall all the way back to 1800 or slightly lower. But none of that changes the long-term prospects. We told you in the macro cast we're likely to go sideways for the first 6 months of this year, and that's still the case. So hang in there. Be patient. The Fed will be forced to turn the printers back on by later this year. And boy, that will change everything. Have a great weekend, everyone, and thank you for listening to your TF Metals Report podcast highlights.